We're going to take a look at SPX on multiple time frames, starting off with that quarterly candle since it's ending this Friday, and then we're going to head over to Apple. So stick around. We're going to do Apple on daily and 65-minute time frame. And apologize, I have not been on here for a few days, been a little bit under the weather, but we're going to get back into it and hopefully start doing them daily again. So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. And we're going to jump right into SPX on the quarterly candle. It appears that this is a 1, 2, 3, 4, 5, and if that is the case, we have a really large, if this is the end, that a real high degree correction should be in store, and we have a lot more to go. But if we're looking on this time frame, that 2200 area to 2500 area, that's what we've been kind of targeting in the very long run here. So that would bring us right back down to the lows of the Corona crash, and that would also be the 618 retracement. So this would possibly be a brand new 1-2, and then we start heading higher from there. But the quarterly candles, what's important, it's struggling, but it's staying above the 8 EMA right now. The 8 EMA is a very important indicator, even on the quarterly time frame. You see how price pokes over under it, but it's a trending indicator, so that's why we use it. When this candle closes, it needs a strong close above, and then the second candle above it needs to stay above and start firming up and continuing the trend to the upside. But really, it's looking pretty weak. We'll see where it closes, and it's kind of a sideways situation, so it may just close right on top of it, and we'll have to see what happens next. But we have a reversal candle in that case, so we'll pay attention to it. We'll follow up on that candle later on. Now, we don't have any divergence on this big picture for the quarterly time frame, so that does open up that we have one more for the bulls, that bull scenario that I keep talking about, that we could eke up one more time. I'm not in that camp. And so that would create a divergence on the MACD. But RSI, we've been creating divergence for a while. All right, let's go down to the monthly time frame. Okay, on the monthly, you see the channel that we're representing here. We have a 1, 2, 3, 4, 5. And you only, if we're wrong in this, a 1, 2, 1, 2, then this would be, and maybe we have eke out one more high here, but I don't think that's the case. We have 3, 4, and now we're pushing lower highs and lower lows, but we always are talking about this box here, and we've been here for 10 months, so we'll be continuing to look at that. It's the end of the month as well, and so this candle will matter. It's going to be, if it ended right now, it's right dead center in this neutral location of the range, and so we'd have to see as a decision candle if the next monthly candle starts breaking higher or lower. Looking on the weekly, on this weekly time frame, we have lower highs and lower lows. We keep talking about the same thing. We're above. We keep holding this channel here. To me, it's giving a little less of a signal of a breakout. It's not pushing. It's not breaking out. It seems to be going sideways. So you'll notice on the ES that we drew a triangle here, and we just have a sideways move, which to me is a correction. We have our first wave down and a correction sideways, and we should have at minimum a continuation down for another 100% of that move, just for minimum. But we may have something a little bit more greater in store than that. If you look at the MACD and the RSI, that looks like they're just forming some sort of wedge, bearish rising wedge. So let's go to the daily time frame. Trend is our friend, and we do these videos often, so please hit that notification bell. All right, jumping in here, we did draw this channel, this triangle here. So you notice how price is ping-ponging back and forth between this triangle, and so that's probably the reason why we have so much choppiness, so much interpretation of, is it impulsive? Are these waves 3 waves or 5 waves? Well, to me, they look all like pretty much 3 waves coming in, with the exception of this one, which can be counted exactly as an impulse. But so what do we have going here in the near term here in the daily time frame? You can't, in my mind, you can't be bullish at all until we get above this downtrend line. You start getting above this downtrend line, then sure. I mean, if you're bullish, then you can start heading up in this direction. Perhaps this is a gosh, it would have to really start to be impulsive. We need a some sort of catalyst to give us nice big candles to the upside, 3, 4, 5 days in a row kind of thing. It just doesn't look that way to me. Looks like it's waiting for something to happen anyway, whether we're bullish or bearish. But we are getting a bullish MACD cross here. So again, it's something that I have to consider. But I had my down or uptrend line here from that it was like a triangulation. We broke down from that back tested, and now back testing again. So is that just a fake out? Or are we going to start heading lower from here? In other words, you guys, we're just sitting in this neutral position, but I think it has a bearish stance. And so that's why I continue to do so. We're bearish until proven otherwise. That's how I trade. That's how I'm going to continue to analyze the market. I don't want to flip-flop on the larger scheme of things until we get those representations. We have this large move as a correction is broken down. We're on the 65-minute chart. We broke down, back tested, broke down again. Now we're back testing the downtrend line. So this, to me, again, it's just in a sideways situation, but it's also underneath the downtrend. So I'm holding on to my put positions. I keep getting into put positions. Yes, I have to close them out. I have to take profits fast these days, but we are continuing to the downside. Okay, now in this this move here, I consider this correction to be done. You can draw this as a channel as well, and that would be a second sell signal for me in this situation. So that channel, if that breaks down, you can consider that a breakdown as well. All right, so I'm gonna go over to Apple, and we'll go to the daily time frame. And then we'll go down to that 65. I think that will make our point. So we have a divergence here on the daily time frame with Apple. We have a divergence. I think the move is over. If you are bull, you can at least expect if this support, it's a very important pivot here because it's a breakout zone, right? So if this holds on and we start moving higher, this would probably be the target right up here at 165 or so. If you're a bear like I am, as soon as we start getting underneath here, this is a fake break. We're getting underneath the 8 EMA. It's looking weak. We break under here, and then we have the trend line below. This is all the confluence that we're looking at, but I'm already starting on this. With the market being bearish, I think this is going to be a bearish situation as well. We also have the MACD trying to cross over to the bearish side. All right, on the 65-minute, it'll give us a little bit extra to look at. But it's going to paint the same picture. Which one? Let's go here. All right, so after this move, which I consider a B, C correction, and I do believe that this is a B, C, D, E triangle, and this is a 5-wave move up. So you have a zigzag here, which means this is a wave 2. We have a 1. And a wave 1 down, that large move, and a wave 2 up, and we should continue impulsively to the downside. Now we got to this gap, so that's huge resistance around this 160. That was also our opening price for the week, and now notice that we're right at that the options expected move. So that's why we're kind of sticking around this area for the time being, but this is showing, a lot of the other markets aren't even down to this point yet. So we're showing some relative weakness here in tech and on Apple. And I do presume that we'll head lower underneath here. But this is exactly where that breakout point was. And so that's why we had the lower reaction. I think we're going to get back underneath it. But looking at a little bit bigger picture, this is a standard deviation. We have our point of control where all the volume node is, and we start breaking back down into the standard deviation move that we had from Apple. I do think our next point down is to get to that point of the control. And we have some volume gaps in between here. So this move should be pretty hefty here after the catalyst Thursday, GDP, something like that. It doesn't really matter to me. I look at those not as, hey, how do I look at the market in the short term? I just look at those as catalysts on price moving a little bit faster in the direction that it was going to do anyway. So I think that's pretty much all I have to say here. We are short still on Tesla, but we'll look at that later on in another video, okay? Thanks, everybody, for watching. Have a wonderful day. We'll talk to you soon.